Good afternoon, Alex Cole, on this fine September 15th, 2022. How are you, my friend?
I'm very well, thanks. Good afternoon to you.
Good afternoon. Mid-September already, folks. This
Yep.
this market is carrying us through quickly. Let's dive into the charts here on the GoNoGo Show, taking a look at our cross-asset heat map, if you don't mind, Alex. Let's start from the
Absolutely.
top-level perspective. We'll look across the asset classes just from a trend perspective. What do you see?
Yes. So what a week we had. We had a real tumble midweek. I think over 4%
Yep.
on most of the major indices. So obviously the S&P back in a strong no-go trend then for the rest of this week. Treasury bond prices, very strong no-go trend. Commodities has been choppy and struggling and paints a pink no-go bar, and the dollar still in a go trend.
Yep, strength in the U.S. dollar surprising a lot of analysts. Just as a quick point of review, for those of you who are new to the GoNoGo show or to GoNoGo charts generally, what we're doing is taking all of the most widely used and statistically significant back-tested technical indicators and blending those behind the scenes. A lot of computation and heavy math to present the concept of trend, that checklist, if you will, of all of the different conditions we would look for from traditional technical analysis to see whether a market has directional or strength and veracity in the trend that it's moving. So when we see the purple color, that's our strongest no-go trend conditions, strongest trending to the downside or bearish conditions. When we're in green or blue, those are our go conditions, signaling the strong form and the weak form, aqua green being the weaker form of those go trends. And then, of course, amber neutral bars. The market is not always giving us a clear trend direction and strength of trend. So we look at go fish bars as the chance where investors need to just simply step aside. As Jesse Livermore said, there's a time to go long, a time to go short, and a time to go fishing. So that's the colors briefly explained. Alex, let's take a look at the price action of the S&P 500. We just like to use the ETF SPY for all of you who are looking for frictionless trading. If you are index traders, SPY is the S&P 500, and what a choppy market this has been. Alex, talk to us a little bit about what we're seeing from the GoNoGo charts perspective on this chart of the S&P 500.
Yeah, we tried to get into that go trend in July. We moved significantly higher. We actually made a higher high than we had back here in June. But then we rolled over quickly and entered a no-go again. And we saw that the oscillator went below the zero line just before that, which sort of gave us a bit of a lead and tipped us off to the changing conditions. And then we saw a strong rally last week, which culminated in these amber bars, really telling us that we're not sure anymore. Are we still in a no-go, or will this transition back into a go? Well, the answer was given to us on Tuesday with this really strong bar that gapped down and finished over 4% lower. And now we're right back down at these recent lows on strong purple no-go bars. And what's interesting was that as we rallied strongly, the oscillator quickly rose to the zero line where we were able to watch to see if it would find resistance at that level. Remember, when you're in a trend, the zero line acts as an objective level of support and resistance. So when this no-go began, we could then look to the zero line to act as resistance potentially if this no-go was to continue. And that's exactly what happened. We saw the oscillator get turned away from the zero line, still with heavy volume, as the no-go resumes.
Absolutely. Now, Alex and I do not live in a vacuum. We read the same headline news that you do around CPI inflation data or core inflation data, removing energy and food prices from what the Fed is measuring in terms of U.S. domestic inflation. Obviously, the market is digesting some of this news on these heavy days. But what we're trying to do from a technical analysis perspective is remove those subjective biases from our decision making. So whether or not we believe that the inflation data is strong enough to spur the Fed to hike rates further and remove liquidity from the markets, let's let other folks play that game. And instead, what we're trying to do is just quantify what we can see from the market activity itself. So that recent rally last week brought us into those amber neutral territory from a trend perspective on a daily chart of the SPY, obviously rolling back over into strong no-go conditions. Alex, you've also incorporated volume into the GoNoGo oscillator in that lower panel. So one of the other confirmatory indicators we're looking for is heavier relative volume on those downside moves. And of course, we're seeing that in the dark blue line of the GoNoGo oscillator, showing us that we've got heavy relative volume. Now, that's how you would use GoNoGo charts. Alex and I are also strong believers in classical technical analysis, the works of Edwards and McGee from the 1930s. So Alex, let's bounce this out to a weekly chart. No one is trying to say that this is an easy market to trade, or that any one look at the market is going to be consistent across the view. In fact, a lot of the technicians that we really respect and have worked with for a long time have differing views. So if you take those June lows as your starting point, you can start to see a trend line on the right side of this chart with a series of higher lows. And we have a lot of analysts who are looking at that perspective, that the June low was the low, and we're continuing to kind of grind our way out of this bearish trend. When we look at a weekly time frame chart, and we're seeing the whole year of 2022, we see a series of lower highs and lower lows. That's the definition of trend in a technical analysis perspective. And of course, we're seeing a bit of a broadening formation. But if you take this primary trend perspective, as Charles Dow told us, we have to look at what the underlying bias of the market is. We're seeing that there is a series of lower highs and lower lows. And of course, our weekly bars from this GoNoGo trend chart are showing strong bearish conditions to the overall market trend. Now, this is the primary time frame. We're looking at weekly charts right here. But what we're saying to all of you is that just the price action of the S&P 500 right now is open to interpretation. There are a lot of technical analysts that are starting to draw their trend lines off of those June lows rather than looking at the whole year in composite, which is why we look to our macro factors for other influences, right? John Murphy and others who wrote about intermarket analysis, folks like Marcos Katsanos, who helped to quantify what those intermarket relationships are. There's certainly a lot of information that we can find from other asset classes and how they are behaving or trading, what their price action is telling us, that will affect our equity markets. So Alex, let's turn away from the S&P 500. Let's pull up a chart of the TNX. This is the 10-year US Treasury yield that's going to help us understand what we're facing in terms of a rising rate environment here in the US, which is, of course, a headwind for stocks. Alex, talk to us about this chart of the TNX.
So if there's any reason to believe that the general trend of the markets is still a no-go, then this might be one of the charts that you'd be looking at to give some evidence or some weight to that argument. And you can see that the TNX, the Treasury rates, have remained in a strong go trend. And in fact, after correcting, generally found support here at the zero line, and is now the oscillator's back in positive territory as the trend strengthens. Now we are at the prior highs, so we will have to see, will we break above that, set a new high, which would be bullish for rates, or will this act as any kind of resistance at this level? But certainly from this chart, there is nothing to suggest anything other than a strong go trend in Treasury rates, which, as you said, would then be a continued headwind for equities.
Absolutely. Now, keep in mind, rates are moving inversely to the price of bonds. So we're seeing a sell-off in bonds and a rising rate environment. Obviously, the headwind for stocks here is that removal of liquidity from the markets, more expensive access to capital is going to continue to slow down the economy. We've got a lot of investors who are positioning for potential recession through the end of this year and into the next year. And it is that psychology behind how they are positioning that's creating these price trends for us in the equities markets. So Alex, let's move on from the TNX, from the Treasury yields. Let's look at the US dollar, which has really confounded a lot of analysts who are expecting this to roll over multiple times as it has just continued to rally. And again, on a weekly basis, we're looking at long-term trend of the US dollar. Talk to us here, Alex, about what we're seeing from a trend perspective.
Very, very clean go trend on a weekly basis. You can see just a series of higher highs and higher lows, really continuing through the chart. Oscillator, once it had broken above the zero line, finding support continuously at that level throughout the trend. So we're really, according to the technicals baked into the calculations, still in a strong go trend with positive momentum. And if we take this down to a daily chart, you can see that generally speaking, that is still the case. Higher highs and higher lows. We are still in a go trend, painting strong blue bars. We had some weakness this week, but we found support so far at the zero line as the dollar price rallied again on strong go bars.
Absolutely. Alex, if you wouldn't mind, pop that back to the weekly chart just for a second. Because whether you are looking at a software company or corn or Malaysian palm oil futures, the idea of trend following is that we want to maximize our outsized gains when we have a trending security. When the trade is working to our advantage, we have to be patient enough to stick with that trend. So I just wanted to pull out, as we were looking at this chart of the US dollar from July of 2021. So a full year ago, last summer, when we began this go trend on a weekly basis, you see those series of little green icons. What they're calling out is the interplay between the price panel and what's happening with GoNoGo oscillator. So we know that trend followers need their gains to be outsized to make up for small losses that they're going to take on securities that don't work out. Not all of our trades are going to work out. As traders, we have to have a good risk management approach. But the other side of that is to play with aggressive mentality when things are working to our advantage. So looking at the GoNoGo oscillator in the bottom panel, when we see a surge in momentum, positive momentum between 0 and 6, positive momentum is putting wind at the back of this price trend. So we're already in a go trend, and we see the oscillator come back to test the zero line, right? So momentum surges and then retreats, and it comes back to neutral, but it doesn't break into oversold or negative momentum. It doesn't break through that zero line. So every time we find support at 0 and then surge back into positive momentum, we know that the price velocity, the move of that trend, is confirmed by momentum, and that's a great place to pyramid into our position. Again, this is a chart of US dollar, an ETF of the US dollar index, but this could be any chart, a software company, corn, no matter what you are trading. The idea of trend following is to really stick with those trends and to objectively buy the dip when we are in those trends. And that's what was happening in the tech sector throughout 2020 and 2021. We saw a lot of investors finding those buyable dips. Right now, we're not seeing that in the S&P 500. Instead, we're seeing the opposite with these relief rallies really cluttering up people's portfolio returns. So, Alex, let's turn away from the US dollar and take a look at USO. A lot of commentary around crude oil this week, finding what could have been some potential support. What are you seeing from a trend perspective here on the USO ETF?
Yeah, generally a no-go trend in place on the daily chart. You can see how we broke to new lows here, and then we found the zero line to act as resistance even as we rallied. And today we are seeing a no-go trend continuation icon, the red circle, telling us that the trend is still in place and momentum is back in the same direction as the trend. So potentially we could see prices, or we could see oil prices move lower again to test these lows here, perhaps even maybe making an attempt to set a new low. What's interesting that I was looking at earlier today was that the weekly bar as it stands is painting an amber go fish bar, meaning that we have run out of go directional movement. So we cannot any longer paint go colors on the weekly chart, of course, if it remains at these levels when it closes tomorrow. But we've been looking at this in our research notes for several weeks, how the oscillator dipped into negative territory and then continued to struggle to recapture the zero line and positive territory, and in fact has been turned away more aggressively each time of late, and that then is now being followed by a change in trend, provided we remain where we are when we close tomorrow. But that's interesting on the weekly, crack in the go trend for sure.
Absolutely. And as we started today's episode, as we always do with that cross-asset heat map, looking at the trend of a broad, diversified U.S. commodities index, certainly energy and the oil markets bringing down what was a very strong trend in commodities throughout 2022. All right, let's move on to our GoNoGo Sector RelMap. So we're going to look at the sectors of the S&P 500, all on a relative performance basis to the S&P itself as the benchmark index. We're going to look at the ratio of each, and just simply dividing one by the other will show us the trend of relative performance or relative strength in each sector group, and we can compare across all 11 sectors. Alex, walk us through what we're seeing on the screen now.
Yeah, we haven't seen too much change this week. Where both of us, I think, and probably many others, many of our colleagues, continue to be surprised by the strength of discretionary on a relative basis. This is the second panel here. The two other growth sectors, technology and communications, have rolled over with the markets. Communications obviously a lot earlier, but discretionary continues to hold its own and is painting relative strong go bars to the index. The other sectors doing well are those more sort of
cyclical value-based
sectors. We've got energy, we've got financials, we've got materials and industrials, and even healthcare coming back in here to a go trend to join utilities. So we've got some defensiveness in this picture for sure, and then the surprise of discretionary continuing to push through in its relative strength.
Absolutely. We want to call out a couple of these sectors today. We haven't talked a lot about utilities. It's not the greatest cocktail party conversation, certainly not as exciting as some of the other innovative companies in the technology and discretionary sector. But let's take a look at the absolute trend of the XLU, the utilities sector of the S&P 500. So just looking at this through an ETF, we're seeing on an absolute basis a go trend of aqua and blue bars. But Alex, I'm seeing on the far right side, we may have lost our positive momentum on the GoNoGo oscillator. Talk to us about what you're seeing there.
Yeah, I mean, this isn't the greatest looking chart of a strong trend, but I think what is important to note, as we always do when you're talking about relative strength, you are outperforming a pretty poor market at the moment. So it's quite impressive that the XLU is in a go trend and has been painting go bars for quite a few months. What is also interesting is if you see my crosshair here, you can see that we've got some support at these levels that comes from this clustering of buying and selling here, as well as the highs from earlier in the year. So there is a little bit of support perhaps to be had at these levels. And then to your point, the GoNoGo oscillator, which has struggled to hold the zero line, breaking below it, coming back above it, and now it looks to be dipping back into negative territory again on heavy volume. So not the greatest sign for the strength of this go trend, but the fact that it is in a go trend still when the market is moving lower in a strong no-go is showing that relative outperformance.
And so let's look at this on a ratio basis, just XLU to SPY. So for everybody who is a StockCharts ACP user, you can pull up a free plugin of the GoNoGo trend right in the plugins page for StockCharts ACP. Obviously, we're showing the GoNoGo complete offering with the GoNoGo oscillator, squeeze, the icons, all of the additional information there. But you can look at just a simple relative strength ratio for any chart in StockCharts ACP. And what we're seeing right now is the relative outperformance of utilities against the broad market really throughout 2022. This has been an outperforming sector on a relative basis to the index for most of this year.
Yeah, and I've been looking at this on a weekly chart because it cleans it up a little bit, and you can really see the strong underperformance, the no-go trend in that ratio, through 2020 and 2021, as of course the more growth sectors were performing well and leading the rally after the pandemic lows. But yes, really from the beginning of the year, that switch to strong outperformance, higher highs and higher lows, even this week, the high of the week being a higher high on the longer term chart. If we take it back to the daily, a little bit more choppy, there was so much indecision in terms of where the rotation was going to be over the past few years. But you can see how that ratio has once again taken off to make new highs with the oscillator above positive territory, and right now testing the zero line from above. So very interesting to look at.
Absolutely. So for those who need a little higher beta play, if you don't want to just hold the index as an ETF, let's take a look at some individual utilities companies, starting with NRG. Looking at an interesting breakout here.
Yeah, so this was one that we sent out on Monday morning with just noticing the outperformance of the utilities and then looking for companies that perhaps were well positioned to do well. And very interesting that since this Go trend continuation icon, where the oscillator has generally found support once establishing a Go trend, we can see that that has led to price gains this week. So on a week where, overall we're down a couple of percent, we're seeing price gains this week on NRG, the utilities company. And this, looks like a crudely drawn, I rushed this annotation, but, it looks very much like a bull flag. And that goes back to the idea of buying the dip. Go trend established, correction against that. And then when you see renewed momentum coming back in the direction of the Go trend, you can be fairly confident that the price will move in that direction. So GoNoGo charts in this case are, helping you identify those buyable dip opportunities.
Absolutely. Let's take a look at one more. NextEra Energy Incorporated, NEE. Another utilities company called out in our research earlier this week. Coming right back to test that level of support, huh?
Yeah, so this one, of course, not gaining this week, but still in a Go trend. So we're seeing this Go trend starting a couple of months ago in June. We've seen higher highs and higher lows. And then we're looking at this now. We've seen some topping, some resistance at these highs, but we've got a lot of support at this gap. So this gap here that is providing support has provided support once before. It looks like we fell right down to it, and we've climbed today off those lows from the top of that gap. So interesting. This one's still in a Go trend, still in play. GoNoGo oscillator, which has been able to get back above positive territory, now threatening to fall back lower. So interesting to see what happens there as well.
Absolutely. So we walked through a little bit of the utility sector. Alex, in our last few minutes, let's pull up a chart of the XLF, the U.S. Financials Sector ETF, because we've seen some strength building for financials relative to the rest of the market. Let's look at it on an absolute basis. Again, a reminder, when we are in a relative outperformance to a market that is in a downtrend, this could also be a downtrend, but moving less ferociously to the downside, losing less. So let's take a look at what we're seeing from a constructive point of view in financials.
Yeah, so what we're looking at here, which is of interest, obviously we've had some choppiness, and like you said, the markets have been rough, tough to trade, and there's clearly no escaping that for the financial sector. But what we're seeing here is this oscillator riding the zero line as we look to be making perhaps a higher low. So if we were looking to perhaps position ourselves to take advantage of relative outperformance in the financial sector, this is what we're looking for. We're looking at the slightly higher low here, and we're looking at the oscillator riding the zero line. So would we be going, throwing caution to the wind and going all in on the financial sector? No, not yet, because we'd be really keen to see in which direction the oscillator breaks out of this squeeze. The squeeze is this grid that climbs for every bar that the oscillator stays at zero, meaning staying very directional. There's not a lot of momentum either in the positive sense or the negative sense. So we're going to watch to see in which direction the oscillator breaks out of the squeeze. If it breaks to the downside, then we know that the weight of the evidence suggests this NoGo will still be carrying more weight. But if we break to the upside out of this squeeze, then that might be a hint at continued outperformance relative to the S&P as a whole.
Just for illustrative purposes, what we're seeing on the left side of the chart back in June and July is that tug of war between buyers and sellers when a security creates a bottoming formation. So we see a contraction in the range of price action, but then we're also seeing sustained neutral readings from a momentum perspective. Hence, the GoNoGo squeeze grid builds, climbs to its max squeeze, and then is sustained there. So when we see a break of the squeeze, the direction of that break can be a clear signal for where we are headed next from a price trend perspective. For those of you who've watched Squid Game, you know that a game of tug of war can end dramatically for the losing team. So when the bulls and bears are vying for control over price action, we see high velocity moves in the direction of those breaks. Here we had negative momentum. We're in a no-go trend. Prices are moving down and then stabilize through that max squeeze. We break to the upside and we see positive momentum throughout that initial rally in the financial sector. So, Alex, I really appreciate walking through the markets with you every single week here on the GoNoGo Show. For all of you who are watching this on YouTube, make sure you like and subscribe to the StockCharts TV channel. You can also check out GoNoGo Charts on YouTube. And we encourage you all to download the StockChartsTV.com on-demand application to bring this show and many others with you wherever you go. Alex, I'm looking forward to quite a bit of travel coming up this fall. Going to be working with some investors in Toronto in early October for a CMT seminar called Market Mayhem. And then, of course, I get to travel with Dave Keller to India. We're going to be hosting the Asia Pacific Regional Summit in Mumbai on November 5th. So hopefully I'll get to meet many of you viewers at those upcoming conferences. Stay tuned for more information from Alex and I coming up to the Wealth 365 October Summit, as well as the Traders Summit online conference. So we're going to have a very busy fall. Hopefully you can stick with us, and we'll chart these markets together. Thanks so much, and we'll see you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.